Right. Welcome to today's webinar. Today is the 23rd of July 2025. We'll be looking at the flash PMIs as well as the Euro Central Bank's decision, which will impact the Euro. Cool. So as always, my name is Shuman, and I'm an FX strategist. I specialize in technical analysis, and so today we'll be doing some of that. But first, we'll be looking at what the PMI means, and then we'll look at the Euro-dollar charts for the technical analysis. Okay. So quick disclaimer, before we begin, trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before making any trading decisions. We start off with your own your demo account first before moving on to your live accounts. Okay. Right now, there is a deposit bonus. So if you are starting a new live account, you get up to $500 credit for your first deposit and 10% for any subsequent deposits. Okay. As always, we're going to use Gemini Deep Research to kind of look at the impact of PMIs, Euro PMIs versus the interest rates by the ECB. Right, so inflation rate in the Eurozone has fallen to 1.9% in May 2025, and that's basically the natural inflation rate many central banks have their targets on. The ECB deposit rate is at 2%, which is half of that of what the US Federal Reserve is imposing on deposits. So essentially, when you are trading euro-dollar, whenever we are holding euro versus the dollar, there is a negative swaps incurred when we have that transaction. Okay, composite PMI is at 50.2, but before that, let's talk a little bit about PMIs. PMI is the Purchasing Manager Index, and that basically measures how aggressive or how much of the demand is in terms of purchasing in the manufacturing sector. So the higher it is, the stronger the manufacturing industry is within that zone. The lower it is, the less demand for manufacturing services. And especially when we are looking at a lot of this manufacturing, with all these tariffs happening, a lot of this protectionist policies are being implemented, we tend to see an increase in the demand for manufacturing within each economic zone, right? So PMI forecast versus the previously for manufacturing PMI in June 2025, that was 49.5. We kind of are looking at a forecast of an increase to 49.8 this month. Same thing for services, and overall as a composite, there is likely, or there's a forecast of an increase in terms of the PMI in July. Okay. So one key thing to note is that there is an increase in terms of PMI index level for the manufacturing sector, whereas for services, it has been decreasing since the start of the year, and a slight recovery towards last month after the May dip to 49. Okay, so a lot in the previous 3 years, there was a steady decline, and then the output has risen for the last 3 months. So in terms of confidence, and also another reason for that would be the tariffs in the US has kind of changed the focus into Europe, since there is quite a bit of uncertainty in the US. However, for services, there is a steep downturn. When you look at tariffs, a lot of the the tariff, the percentage that has been shown in the news that only looks at the physical goods that are in terms of trade imbalance with the US. There isn't much mention in terms of services. And in terms of like digital services, I think the largest exporter is still the US, where a lot of these internet services are coming from the US. So when we look at the domestic services industry in the Europe, it will not be as strong as that of in the US. Okay, so just keep in mind that this, why they are separating these two, because services can mean physical services, but also digital services in terms of like tech infrastructure, the internet, as well as all of these data centers that are largely provided from the US. Okay, so there is a data-dependent policy loop which happens across many central banks. So first, the central banks will be looking at economic data, then they look at how the market will react to all of these announcements, and then they will assess the situation before they implement some policy. So there is a lag in terms of what's happening in the economy versus the reactions to that data. Okay, so long-term projections to 2027, we can basically project a minimal change in terms of interest rates in the ECB, whereas the PMI for manufacturing in the Europe will probably increase due to the trade wars as well as the additional tariffs that are being imposed on the EU. Okay, so main key external risk will be your global trade tensions. Okay, then geopolitical instability, and then in the rare event that the US dollar gains strength, that will actually impact the euro. And when the euro is weakening against the dollar, then they will need a stronger euro for more imports if their domestic manufacturing do not keep up. Okay, so this is kind of like a lot of the macro and fundamental key data. So right now, let's look at the euro dollar analysis. Okay, so long-term wise, we have been looking at this. Okay, let me share that with Zoom. Screen, okay. So euro dollar since January 2025, right? That was the low of euro dollar. And for this entire, this has been moving upwards in a rather straightforward manner. And in terms of the long-term trend that we can see, if we marked out this entire area here, okay, we just recently touched upon this trend line here, and it looks like we are moving up into the next band up there. Okay, so as always, we're going to use the Wayne's pivot just to look at the monthly playbook here. For those of you who are new to the pivot points, you have 9 key lines. The ones the pivot point indicator that we're using is called the Wayne's pivot, right? You can use any indicator. They will do the same calculation as this indicator. Right, you have 9 lines. You have the yellow line here in the middle, which is your pivot. Your pivot line is the average of last month's 3 key points, high, low, and close. You get your pivot point. You have 2 resistance lines, R1, R2, and then S1, S2 support lines. Okay, R2 and S2, they're equal distance, and that's basically the range that we saw last month. And if we see a similar momentum, then we'll probably see that move from the pivot, price move from the pivot all the way up to R2, which is around the 1.2 area. Okay, So a few other things to note: whenever we are bullish, we want to buy just in the area below the pivot, above M2, and our target will be R2, M4. Whenever we are bearish, we want to sell M3 above pivot, this red zone here. Can you guys see? Okay, and the target is the M1, S2. Okay, so on the high time frame, we are bullish, so we are looking to buy in the area of pivot M2. And another key thing to note is that one deterministic way to identify the trend is to look at when prices closes above the R2 for a bullish momentum, and if it closes below S2 for a bearish momentum. Okay, so I'll give you two examples here. In October of 2024, right, it closed below M1S2, and this will immediately be our near-term resistance. Okay, it was previously the support, and then it broke below, and it comes to resistance. Okay, one key thing to understand is that S2 is, you can take it as like 2 standard deviations from where people think that it's a normal price. And if sellers are willing to sell below the price, it means that overall they are bearish. Okay. And also, if you look at the period from, say, April all the way to September, okay, again, down here around April to August, okay, Euro tend to appreciate against the dollar, and towards the end, that's where the sell-offs happen. Okay, another period that we saw was in March, where the euro broke above R2 against the dollar, and so we are in that the start of that upward move. Okay, so right now we are looking at this support line, and again last month, right, broke above R2 and 4. Okay, and then it comes back neatly back into this area here. And when we are bullish, we want to buy in the area just above M2 and below pivot. Okay, so somewhere around here, that was kind of like the entry for us. All right, so the pivot points can be applied on all time frames. So if you go to the 4 hours, okay, this is the 4 hours on the weekly pivot. All right, so we started the week below the pivot. So that was the weekly low. Okay, and could we have entered in this area? Okay, so this was the trend line that we were following, right? This was the trend line, and then a more aggressive downward push on the 15th of July, that's the middle of the month, that created this move here. And so as a breakout of this, we were looking for the upper bound of this channel. And the idea was that we were looking for a push to the downside. So essentially when the week started below the pivot, this was kind of unexpected. But as it pushes up against over M3, okay, and found support at this level, this is a bullish week for us. Okay, so euro dollar, we're expecting R2 M4 for today or for the rest of this week, and the target will be at about 1.17779. Okay, so this, I'm just going to put this as the buy target, and this is the weekly buy target. Okay, so having said that, we can look at the 1 hour, and we can remove these 2 channels here since we know that it has broken out. Okay, so this is the prevailing trend right now. Okay, let's take the low of this area here, and then we're gonna just knock these levels up. Okay, so this is a daily play. So M2 is somewhere around here, right? And if we are bullish, we want to buy just below pivot and above M2. So this is, we're in a key area right now. Okay, and ideally you want to follow this line towards the upside. So what we're looking for is, was there any break above R2 in the previous periods? So there was a break above R2 here, but it did not close above R2. But again, this was last week's high. And we can see that this coincides with our M2. So potentially we're going to look for an entry at this level here. Okay, so just to couple this with the PMI data. So if we have a increase in the PMI in the Eurozone, so more demand for goods and services in Europe, okay, okay, potentially we want to see a weaker euro such so that their exports can increase, right? But against the dollar, because both are implementing protectionist policies, then by definition, we will want euro to appreciate against the dollar, right? Since the US is not looking to import from or they're implementing policies that will decrease the demand for goods and services in the Eurozone. Okay, so in that case, then you will want a stronger euro dollar such that the it will be cheaper for people to buy the dollar denominated goods in Europe, right? They can buy more with their euros against the dollar denominated goods. Okay, so potentially we want to see this first target being hit. Okay, again, PMI is a very long-term, mid to long-term fundamental news, fundamental data. Okay, technically, we want to see this by the end of this week, which is tomorrow, or by Friday, okay, to hit this bi-weekly target. Okay, and if we are aggressive, this is actually the daily target. Okay, which sits above your weekly target. Okay, and this is due to the very aggressive move that happened yesterday. Okay, so that yesterday's move actually gave us a very aggressive target above the weekly buy target. And if I were to go to the daily, you can actually see the monthly target. This is just going to be the monthly M3. So the monthly target is actually somewhere around here. Okay, so there is a very aggressive monthly target set because of last month's aggressive move to the upside. Okay. So monthly target is somewhere around 1.2050. Weekly and the daily target sits just above each other. So that is basically the target that we'll be looking at. Okay. We have a very slow moving downward trend. So once we break off this trend, this is where we'll be looking to enter a buy into the euro dollar. Okay. This, maybe we'll see something like this later today. Okay, something like this. That. All right. So pretty straightforward euro dollar analysis. So whenever we're looking for buys, right, we look at the swing lows, right? The swing lows suggest that there were buyers coming in into these areas here, right? And if you are convinced that euro dollar is going higher, right, you will not want to buy anywhere above this area here, right? Because there are buyers who came in here, which gives you sell side liquidity, right? The stops are the sell side, so they're willing to sell to you below these prices. And if you are convinced that prices are going higher, then you will want to look for your buys from the sellers in these areas here. Okay, because if you were to buy from people who are selling above, right, then the narrative switches, right? They might be the stronger market force against your buys. Whereas if you are a buyer in this market, you potentially want to buy at areas where there are sell stops or people who are selling at a lower price for you to get in. Okay. Yeah, let's take a look at gold. Gold XAUUSD on Vantage. All right, so this was what we were looking out for in our previous session. Tonight, there is going to be some news as well. And yesterday, we poked out slightly above that range there. In fact, if you were to draw it closer to this area here. And so you want to look for an entry within this area here. You potentially want to see that this candle wick here. Okay, so this candle wick, basically when you're on the high time frame and you see a wick overlap with a full body, under the lower time frame, this is going to be a downward candle. So you just have to go down to a lower time frame. Okay, 15 minutes is sufficient. So on the 15 minutes, you can see this white candle here. So this was the last batch of sellers who were attempting to sell this triangle, right? The bigger triangle that I've drawn earlier on, right? So there were sellers who were looking at this and said that if price do come up to here, this is where we're going to sell, right? And that was proven by this white candle here, which means that if prices break above this level, all of the sellers in this zone are going to be wiped out. And then you have fresh sellers coming in later on, right, at better prices. But as it dips into this area, you're going to see lesser and lesser sellers, okay? So this morning, we were in a kind of a range, okay? But the London open at 4 o'clock pushes above this high here. So we did not get above the yesterday's high, okay? But more importantly, 7 o'clock came to sweep the 4 o'clock candle, right? So still we're seeing strong demand for gold around this area here. Okay, so even though this is 100%, right now what we want to see is the highs being taken. Okay, then we will have a confirmation that prices are going to go up higher. Okay, with this high and this formation here, we are also looking at this triangle here. Okay, so triangles are usually formed when both sides are indecisive and they are not taking the previous highs or lows as their targets. They're cutting their profit taking short and protecting their capital. Okay, so whenever this happens, we'll be looking for a move within this triangle, okay, until one side breaks out, okay, before we have a high conviction trade. Okay, so there was a resistance form here. It broke below this low and it came back up to take the remaining positions, come all the way down, where we'll be looking for a buy probably around this area here. Okay, so the last group of sellers was here. So we probably want to take 50% of this area here. All right. All right, cool. So I think that's about it that I have for you guys today. Yeah, should we look at some indices? Okay, US 30 moving the most. Let's look at the lagging piece then. Okay, so rough sell-off, small sell-off yesterday. Okay, but we are creating high highs still. Okay, so I'm just gonna readjust this so that we give ourselves a little bit more space. Okay, but potentially M3 target was R2 M4 bullish month last month. So now breaking above M3, we should be bullish this month as well. Okay, we are at R1, so that was a break. Okay, we want to see all the way back down, probably down to last Friday low or last Thursday's low. Last Thursday's low, and then a continuation to the upside for this month. Okay, so let's quickly look at the daily before we end this off. So still very weak in terms of a move because of this key points here and then a break. So we potentially will still see a move to the downside to get to a better price for the Nasdaq before moving upwards. Okay, so we started the day in the M2 pivot, so it might not be today, it might be a push the upside first, okay, and then maybe get up to this level, back down, and then up again tomorrow. Here you can see a lot of short clearing, covering around this area here, okay. Usually if this was additional shorts, you will see something like this. Okay, but the fact that it hovered up here means that they were covering from this scalp to the downside. Okay, yeah, I think there's a few key lines that we can watch out for. This did not make a higher high, it broke down. So I'm going to watch this candle here very closely. And that's basically today's R1 around 23,201. Okay, so once it gets up into this area, this is where we look for either a breakout of this level or a continuation to the upside. Otherwise, it's probably going to be a lower low, lower high, and then a sell-off. All right. So that's what I have for you guys. Okay. Keying today would have been euro dollar. So still feeling a little weak. So I think there was a sell-off, right? An attempt to break above and then continuation to the downside. Okay. So but this is still the key point 1716. When it hits this level, this is where we will be looking for a higher high and a higher low. All right, cool. All right, that's all I have for you guys. Again, if you guys want to get an analysis from Gemini, it's free right now, right? Where you can go to the Gemini app and search for the Euro PMI as well as the ECB monetary policies, right? And you get a very nice article written as well. So I can show you the original article, and this infographic is created from that article. Okay, so this is actually the original article. So you have quite a bit of information, right? And you are able to export this either to docs or create a web page, quiz, and share that with your whoever you want to share with. Okay. One important thing to note as well, the data that the Gemini is using to generate the report, make sure they are from reliable sources. And also a good thing or a tip is that you might find some of these websites to be of interest. You might not have not known those websites before, but with Gemini, right, it scans through all of these websites to give you that report. So some of this might be useful for you guys. So do have a crack at it, and you might be able to find something useful for your trading. Right? Okay, past webinars can be found at vantagemarkets.com/academy/live. And if you have any questions, feel free to email me support@vantagemarkets.com. All right, with that, all the best to the upcoming training session, and I'll see you guys again next week.